Hi guys, my name is Pete and this is Trading Kitchen. Welcome to this new video. I have been far away from posting videos on YouTube. I was concentrated on my trading activity. Anyway, now I'm back and just want to share with you guys some videos beginning from this one, in which I try to deep some technical aspects in my trading activity. Also about risk management, checklist rules that you have to follow, some quick tips, and obviously I will try to focus on my strategies today. I just want to begin from one particular kind of pattern, which is not the classical candlestick pattern that you get used to, but so no double top, double bottom. I don't care. I don't believe anymore in all the stuff. I try to follow the liquidity. Okay, so I try to concentrate on what big boys out there do. Okay, so I try to understand what is the logic that stays behind market movements. And today just want to speak about Wolfe Wave pattern, which is a pattern that I learned from Linda Raske. You can easily find her YouTube channel, and this is for me is one of the probably the best pattern that you can look for. I find this pattern almost every day, and every day I get some profit using this pattern. And why is so important this pattern? Because it's a pattern built on liquidity. Okay, that try to find some institutional manipulation. Okay, so but before do that, just want to share the screen, in which I invite you to join my Discord group. And my Discord group, I will share every day my trading ideas and some educational content. This YouTube channel that I invite you to subscribe, ring about all the same stuff. My Instagram page, in which I share some quick tips, and obviously Trading View, in which I do the Monday live analysis. Okay, everything this is for free, guys, but just help me grow my community, because this is only the only thing that I need. So let's move on Trading View. Okay, so let's first start from the pattern. Okay, so now I will show you the classical schematic of this pattern, but obviously it's quite different inside the market. It's not always simple and obvious like in this case. Okay, so basically the Wolfe Wave is this one. Okay, so you have a trend line, you have a fake breakout, and you have a huge rejection and a return of the price into this area. Okay, then we have price that breaks the structure. Okay, and finally we have a back test of the price into the main area in which there are a lot of volumes, and here basically is our short trade. Okay, and then we can see price falling massively. Okay, here. So basically this is the pattern. Okay, so this is the theory. Okay, and what we have to do, what we should do, is try to understand the logic that is behind any kind of movement. Okay, And I like very much this kind of pattern because it's a clear example of manipulation, as I told you before. And why I told you that? Because this is usually called by retailers a trend line, but the reality is that this is, for the institutions, is dynamic liquidity. Okay, this is not a fake breakout. This is a liquidity grabbing. Okay, so what does it mean? It means that here we have all the buy stop orders, okay, from the retailers basically. Why? Because this is a trend line. As retailers see a break of this trend line, means that price will probably pump up, okay, which is obviously what the institution want us to believe. The truth is that this movement is a manipulation, okay, that we can see it from a huge tail, okay, and short body. Okay, this is the origin of the pin bar. Okay, but it's not the pin bar itself that make a huge movement, a bearish movement, but it's a manipulation. How can you see the manipulation? Because I see this long tail and short body, and after this liquidity, dynamic liquidity. Okay, so we see a huge rejection of the price that return inside this area, okay, is breaking this structure, okay, which this structure is also the last buyer dominance. Okay, so what does it mean? It means that this is the last strong in which we have a huge concentration of volumes from buyers. Okay, but now when we see a strong rejection and price is closing below this structure, means that finally buyers are not anymore in control of the market, and now market is from the seller's side. So this is a new buyer, a new seller dominance. Okay, so price breaks this structure and is going to retest it where? Here, or basically inside the premium zone of this range, and the premium zone is this one. Okay, so above this 70%, okay, of this range, 70-75. This is not a Fibonacci retracement level, okay, it's just the quarter theory. Okay, so we have, if you want to look for a short, we have to wait for a rejection inside the premium zone. The premium zone is above the 70% of this range. Okay, and this zone is where we are going to set our trade, to set our short. I will not repeat the same concept on for a bullish trade. Okay, is the same thing. Okay, so guys, this is basically the logic that is behind this pattern, and let me show you some example using my trading journal, in which I will share all this all my trades, okay, basically every day, And yeah, you can find my strategy. We'll speak about my strategy probably in the next video. But basically, this pattern, I use this pattern for, as you can see here, LP, which is liquidity pattern. So the Wolfe Wave is one of these patterns, and by which I build this strategy, from which I build this strategy, and yeah, probably the most profitable one. Okay, so let's take a look to an example, and we have this one, April the 7th on Nasdaq, and April the 7th. Well, I remember this. I remember this trade. They're more or less the same trade, because obviously we are on US Indices, which is 90% correlated. So the reason that you see 1.5 of R is because as they are correlated, my risk is half the size, okay, and I enter in both of them. Anyway, let's see an example. I have here, so as you can see, here we have a trend line, okay, fake breakout, strong rejection, and look at the volumes here. This is a very useful indicator that you could easily find on the trading view. And so anyway, you see this huge rejection, okay. This is a manipulation. Look at the, yeah, it's quite before US opening, okay, and but this is pretty much clear. Huge rejection. You see that we have to wait for the breakout of this structure, so the last buyer dominance, price confirms that want to go short, and then we have to wait our back test to open a short. So in this case, yeah, the stop loss will not be few pips below this high, okay. Just let just a little bit be wider, okay. So, and my traditional risk reward ratio is 1:3. Then I decide if leave the trade or not. Anyway, this is the trade, okay, and this is perfect, okay. Look how the price retested the same zone in which this huge movement had been created, in which we saw this manipulation, okay. I use the volume profile of the range to better identify the exact price level in which I will want to trade. So basically, this is the trade, and I recommend you not to use a short stop loss, a small stop loss, because if you trade inside the US opening, in particular, you can easily hit your stop loss. So be sure that your stop loss is large, and the risk reward, as I told you, is 1.3. Yeah, if you use a large stop loss and you trade the indices, you can be pretty much sure that price is going to do 1.3 risk reward, okay. So don't worry about that. Yeah, here we have another example which is quite close to today, and we are on the future of S&P, and we see there's a trend line, fake breakout, manipulation, where here we are at the beginning of Asian session, but anyway, as the same. So we have this manipulation, we broke the structure, retest where the manipulation began, and what the retest is here, just the beginning of this value area. Okay, the short will be here, 1-3, and that's it. Okay, so this is quite frequent. It's quite frequent. You can see it almost every day. Okay, yeah, this is another one. So we have a trend line, fade breakout, price goes up, retested, break the structure. Okay, retest here, and then we can go long here, more or less. Okay, risk reward 1-3. Here another one, guys. So we are on the 13th of April, and the trend line during the edging session, fade breakout, price return inside the zone, break the structure. Well, to be honest, now the structure, in this case, the structure is not broken. Okay, but probably the dominance will be this one, because it's the last zone before this huge impulse that broke the last resistance in this case, so the last zone. So basically the dominance will be this one. So price broke this dominance, retested this value area from which all the impulse had been created. So we're going to go short here, stop loss just above this high, and same old story. So guys, that's pretty much it. I hope you like this video. It will be the first of many videos, I suppose, I hope, but I just want to give you some good content that can be helpful to be a better trader. Okay, I remember to subscribe my Discord channel, Discord group, which I will share my trading ideas every day. YouTube channel, you can follow me on Instagram and on TradingView as well. Okay, thank you very much, guys. See you in the next video.